As the Dow looks to recover from its worst day in 14 months, the Nasdaq still trying for that record close. Joining us now, I'm pleased to say, Sound Planning Group CEO David Stryzewski. David, always great to have you on the program. NVIDIA yesterday did not hold up the rest of the market. Can AI hold up the rest of the market?
Well, Taylor, great to be with you here. AI is in the beginning stages of what it's ultimately going to become. And I don't think that we really have seen, much more than a glimpse on the surface here. So, most of the rally's been around NVIDIA. And obviously, this is the major chip player. Everything with AI has been evolving around this. But I really see us kind of transitioning AI here into the next phase. And that's where integration is going to be taking place. So for AI to continue to lead this rally and cause this to really continue forward, we're going to need to see integration across, Apple and apps. We're going to need to see it across Microsoft and cloud-based systems, making our life easier, safer, more efficient and effective. But no, I don't think that it's ultimately going to be able to keep things going up. But, we might see a little bit more of this melt up prior to, in my opinion, seeing a meltdown come later here in the fall.
David, Goldman Sachs is out saying we could see the first rate cut in September. Now, I don't see that at all, but I would say that would be a really political-looking move. And frankly, given the inflation data we've seen, dangerous. Are you there? What do you see?
Yes, on all accounts. Political because, well, obviously what happens right after that September timeframe is that we have the election. So, we just saw 1 million new barrels of oil entered into the economy in effort to try to curb inflation. In my opinion, Powell is losing the inflation battle, and it's very apparent. If we look at CPI, hotter reads than were expected. One of the things I like to do is take the last 3 months of CPI, though, and then times that by 4, and that gives you an analyzed number to expect. So on CPI, we should be expecting a 4.4%, way different than the 3.5 we're seeing right now. 4.8 on the PPI, which ultimately those numbers show up in CPI a few months later. So that is not the trend that Powell wants to be on. And so if he cuts rates right now, Brian, to your point, I think that we're going to see another melt up. The market's going to just go, okay, now we're off to the races. Everything's going to go up. He cannot drop rates the way that he needs to. But at the same time, he's kind of in a rock and a hard place because specifically the banks today are in big trouble with these higher rates and the inability to metabolize corporate debt. And all the challenges happening right now in real estate. So this is not an easy moment to figure out.
David, we see the market here pretty much at record levels. We had a little bit of a sell-off yesterday, but still marching higher. It's a market that wants to believe in Jerome Powell, and it wants to believe that he's going to cut rates. But then every once in a while, it gets this kind of gut punch, and it realizes he may not do it. He may not do anything this year at all. As we continue down this road and get more data points that indicate maybe that is the scenario, that he won't do anything and rates will stay higher for longer, and the market really starts to believe it, do you think that it sets us up for a breaking point and possibly a correction?
To quote the famous Warren Buffett, a rising tide lifts all boats, but you only find out who's swimming naked when the tide goes out. So, but these moments of exposure are when we find out, what do we really got and what do we, not ultimately have here. And so I think if we actually just even follow Buffett's example today, he's sitting on more cash right now, 34% of Berkshire Hathaway, $189 billion. Part of that was he's expecting taxes to go up, so he's willing to pay a little bit today. But also he's waiting with dry powder here in anticipation of what you exactly said. When we have our next little hiccup here, that's the time that we want to buy. And so there are great names, there's great technology, there's great opportunities going forward here into the future. It's just that the market's sort of been priced to perfection, in my opinion. And even the biggest names out there are looking at this thing with a lot more caution today than they have in the past.
When we get those hiccups, you're going to be the first person we call back. David, thanks so much. Really appreciate it.
Thank you.
And meanwhile,